foreclosure, which is more beneficial to the lender or servicer?
I would say that the foreclosure is more beneficial to them because in many ways it's less of a hassle for them. It's the hammer comes down, the property is sold, they collect the money.
Insurance monies too.
Yes, as I have said on your show before, most lenders in terms of any loss on their investment get paid 3 times. They get paid by the loss share agreement that they did with Treasury back when the crisis hit in 2007, 2008. They get paid on the credit default swap insurance that a lot of investors bought on these loans.
What is credit default insurance swap?
Well, that's why AIG almost went down in 3 years ago this month, because they had issued insurance policies to investors to say, if you have a loss on this investment, we will pay you the loss. And the funny thing about it is you didn't even have to be that large an investor. You could buy into one of these securitized pools for $15,000, take out credit default swap insurance, and get paid 100% of what your loss would be because that trust tanked.
So a foreclosure could actually be a money-making process for these servicers or lenders.
Yes, it's very much a money-making process, which is why you cannot trust them if they say they're going to stop the foreclosure.
What about loan modifications? Where do they come in this process? Should you try to modify the loan before doing a short sale, and will the servicer or lender look favorably upon that?
I think that I would always advise people to try to do a loan modification first. The reason is that you will have had to accumulate all the documents you're going to need for a short sale. It may give you an opportunity to stay in your house if the payment can be brought down to a level that you can deal with. And if you do not qualify for a loan modification, then the lender already has all that paperwork and it's more of a seamless transition into the short sale. The other great thing about filing for a loan modification under the Home Affordable Act, they have to stop collection proceedings against you while you're in a loan modification. So for a lot of clients, if you can get to a person that does loan modifications, or if you can file your loan modification 15 days prior to the foreclosure, it will stop the foreclosure sale.
So you don't feel as though that these lenders who lose documents during the loan modification process, it's not a stalling tactic to be able to foreclose upon the home?
No, because if they are a HAMP service provider, they cannot, under the HAMP guidelines, continue the foreclosure action while you're in active modification.
Okay. You mentioned hardship statement. What are some of the other documents that may be required by the servicer or lender when you're going through a short sale?
They're going to want 4 months of your bank statements. They're going to want a statement of affairs. Essentially, this is what my income is, this is what my bills are, this is what my assets are. And they're going to want to see any other documents related to what income you have going out in, and or what you have going out.
Is there any other language that should be put in a contract that will protect the seller in the event of a short sale?
Well, I think that the seller certainly can tell their real estate broker that their goal is not to have a deficiency at the end of the short sale. So they should put in the listing contract that the goal is to have a forgiveness of the deficiency. And if they actually have a sales contract, they need to know up front what expectation the lender is going to have about their responsibility for the deficiency. And they need to make sure that they reveal to their broker, if they have a second trust on the home, who's the servicer for the second trust, and also negotiate with them about what they will take to go away.
You mentioned earlier the second trust lien holder, they could actually stop the short sale?
Yes, because that lien has to have a certificate of satisfaction to pass clear title to the buyer.
What do you normally have to do to satisfy that second trust lien holder? What do they require? How many cents on the dollar?
It varies. What I've seen is that second trust holders will walk away with as little as $5,000 to $10,000 on a $50,000 to $60,000, $70,000 second trust. Remember, they're going to collect.
Yeah. Generally, they want something. They're going to want something to satisfy their lien, or they're not going to release the lien, and therefore they could put the kibosh on the whole thing.
A lot of times what they will say is they'll say, we'll release our lien, but we're not releasing our ability to come after the borrower.
Now, we mentioned protecting the seller. Is there any language in the contract that should actually protect the buyer?
Well, I think that the buyer should make sure that they can get their deposit back if the short sale is not approved. The buyer also should make sure that they understand what repairs are needed on the home and negotiate who's going to make these necessary repairs. Generally speaking, the buyer has to, but a lot of times you can negotiate that out. And they also should make sure that if it's not approved, and there's got to be a time limit. If I was representing a buyer, I would say, you have to get this approved in 60 or 90 days, which I think is a reasonable time limit, or I get out and get my deposit back. Because a lot of short sale buyers are looking for bargains, and as long as they're stuck in one contract, they can't move on.
Where does the title insurance play in a role in this?
Well, if you're a short sale buyer, you definitely have to have title insurance.
Owner's coverage and lender's coverage?
Well, the lender, if you had to borrow money to go into this, will require lender's coverage. But you should have buyer's coverage as well, because there's a lot of lenders out there that are doing foreclosure sales that are unlawful. And there might be people like me who will sue to reverse a foreclosure. So you're going to want to know that you're going to get your sales price that you paid back in the event that the foreclosure is set aside.
What is the impact on the credit score of a short sale?
A short sale is much better than a foreclosure. You're going to take a hit on your credit, but generally speaking, after 24 months from the date of the short sale, you should be able to qualify for a FHA loan with favorable and normal loan terms at that point. A foreclosure is a different story.
Okay.
A foreclosure is going to make a harder hit on your credit, and the time frame is at least 60 and sometimes up to 72 months before you will be able to get a favorable interest rate.
Big difference. So on a credit report, will a short sale show up as a forgiven debt?
Yes. What the lender will do is they will say, here's the principal amount, here's the payoff, and then normally there will be language as to a forgiveness of that deficiency.
So after a seller goes through a short sale, you're estimating about a 2-year hiatus before you can apply for another mortgage loan or get approved for another loan?
I would say that if you want a favorable rate, yes, it will be 24 months.
Would you recommend the services of an attorney like yourself to perform a short sale, or would you say an agent, a real estate agent, can handle it just as well?
Well, you know the answer to that question, Mark. Of course, I would always recommend that people, because there's so much at stake, at least consult with an attorney. But I think that if you have a real estate broker or agent that has done short sales and been successful, then I don't know that you need to involve an attorney unless you reach a roadblock where you need some muscle to come in and sort of get the lender more on board.
We only got a couple minutes left, but in the event a lender will not forgive the balance due on a loan, what should our viewers do?
If you're faced with a large deficiency after a closing, I think that the borrower needs to take a good hard look at their total circumstances and may consider bankruptcy.
So you actually recommend bankruptcy in that instance only?
Yes, I would recommend bankruptcy. If you want to clear out that deficiency, it would be a set amount. You could list it as an unsecured debt on your bankruptcy schedules, and you could get that debt, be relieved of that debt.
What is the event if the property needs repairs?
Generally, it's sort of buyer beware. What you see is what you get. And the only time that in the sales contract, both the seller and the buyer need to be careful, but especially the seller, is the seller does a walkthrough before they sign the contract. You need to be very careful to list what the problems are with the property, what you see to be repaired, because you need to do a walkthrough prior to settlement. If a disgruntled homeowner has taken their revenge on the property, you need to know that as a seller. Don't go to the closing and sign all the closing documents and then go see the property. I always recommend that the seller put in an initial walkthrough and a pre-closing walkthrough.
Karen, thank you for being here today. Thank you for sharing your expertise with our viewers. Remember, if you have some questions in regards to mortgage loans or short sales, please visit our website at www.markrigney.org. If you have any questions about mortgage modifications, please visit Karen's website, which is displayed on the screen below. We will read and answer some of your questions on our next show. On behalf of my friend and colleague, Karen Kennedy, thank you for watching Financial Solutions with Mark Rigney. We will see you next time.